How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. Welcome to Forex Fridays. This one's going to be solo. I'm not sending out any Zoom link. It's just me by myself in my office. I'm going to talk about a few things tonight. I'm going to talk about the weekly range review. We're going to talk about the IPTA review. We're going to talk about the daily bias, bullish versus bearish. We're also going to talk about interest rate differentials, mainly concerning the yen cross pairs, because I think you guys can utilize that. And we're also going to talk about the counter trend days, more specifically how to compound in trending environments. So before I start, I'd like to say to all my subscribers, anybody that's in the Telegram channel, anybody that follows me on TradingView, Instagram, if you know me personally on IG, whatever it is, thank you for your support. I really appreciate the nice comments and feedback from you guys. I'm doing as much as I can possibly. I just want to give this back to the trading community because I think everybody deserves it. With that being said, let's jump right into our weekly range review. So first things first, if you've been following me for a while, this concept, Sunday's opening price, also known as the weekly opening price, so the start of the week, is going to be fair value. This is how I know whether or not the market is overbought or oversold. And whenever price is above Sunday's opening price, it's going to be a premium. And once price is below Sunday's opening price or the weekly opening price, it's going to be a discount. So this is overbought and this is oversold. Odds are if the month or week or day is going to be bearish, it's most likely going to be selling inside of a premium range. We can see for this week, the weekly range, Monday made the high of the week. We can see with hindsight, price was selling lower since Monday. So Monday was the high, and we can see here, I believe Friday made the low of the week. Normally it would be Thursday, but we can see Monday made the high, selling in a premium. So the market was overbought. Now, if you've been following the daily updates, you know that I was bearish on dollar going into the month of June. That would mean I'm bullish on foreign currencies like AU, GU, AU, and NU, and other asset classes that are essentially inversely opposite to the US dollar. We can see Monday makes the high of the week and sells off going lower. If we were to look at this on a very specific note, we can see how price is taking out buy side liquidity and running down to sell side liquidity. So if we were to consider Sunday as a trading day, even though it's literally just a quarter of a day, we can see that how Monday comes up and takes out the high there that forms on Monday. And ever since taking out that high, price sells lower. That's how the commercials are most likely getting into their sell positions. They're taking buy side and then running the price to their intentional target. Overall, we know that price is going to target either swing highs or swing lows on the daily time frame, weekly or monthly. And we'll get into that a little later into the video. But you can see how the market liquidates the buy stops. So there's a stop loss above here. So anybody that was selling most likely has a protective stop loss above here. The algorithm runs up, runs it, and then it runs back down after purging it. So it purges that, and then it starts reverting back down. You can see how it purges and reverts right back down to sell side. So it takes out the previous daily low that it formed itself. So going into Tuesday, you can see how it comes back down, takes out the sell side liquidity, and ever since then, you can see price continue to go lower. Tuesday, bit of consolidation. Typically, you don't really see that on Tuesdays, but if there's probably no news events, or if there's a highly anticipated news event later on or later in the week, you may see this happen often. Market makers are building in sentiment. So they're trying to get the retail traders to come forward and put their money in and psychologically throw them off, get people thinking, oh, it's probably going to gain strength. Oh, it's probably going to get weak. But overall, if you're following the daily bias or the weekly bias, you know that they're just doing this to accumulate orders and then flush it back out to where they want it to go. So we can see just overall hindsight, because the week is already finished, you want to sell in a premium if you think you're bearish for the week. It's a very simple idea to think about. If you're bearish for the week, you want to be trying to find a selling opportunity on Monday, Tuesday, or Wednesday. And you're going to probably most likely try to look to take profit somewhere in London close Thursday, or even potentially early New York session Friday. That's what I would do there. But normally, these 3 days will be the high of the week. It normally lands on these 3 days. Sometimes it's Sunday. Don't get me wrong, sometimes it happens on Sunday. Ideally, I'd rather it be Tuesday and Wednesday, but sometimes it's Monday as well, and sometimes it's Sunday. But these early in the week, the market makers are going to position themselves to then go short. They're not going to wait long for premium prices. They're going to get into the premium and then they're going to sell. That's what they're going to do. And the same thing is said vice versa. So we know that we're tracking EU. Those that are in the channel, you guys voted. I put up a poll. Every single month, I put up a poll. People ask me, oh, go back to gold. I'm not doing gold, guys. I already did it already. If you go back to the playlist on my YouTube channel, you'll see that I did gold. It was the first pair that I tracked live on YouTube for the month. So for EU, we can see that it's inverse to the DXY. So the DXY was going down, and you can see foreign currency, EU, is going up. So as the dollar is losing strength, euro is gaining strength. So it's no surprise that we see euro going up for the week. We can also see here, the low of the week is Sunday. So you can see exactly what I was talking about. Sunday is making the low of the week. Instead of Monday, Tuesday, Wednesday, you can see it lands on Sunday. That happens. And that may catch a lot of traders off guard. All you can do at this point, if you know that you have a higher time frame objective, you try to find positions daily, so Monday, Tuesday, or Wednesday, below midnight opening price. And we'll get into that as well. Midnight opening price is the same thing as Sunday's opening price or the weekly opening price. You're using that same concept of being overbought or oversold. And if you're looking to be a buyer, you want to buy below Sunday's opening price or theoretically intraday below midnight opening price. And we'll mark that off there for you guys as well. So if you go to every single day of this week, just to see as reference, this is midnight opening price. We'll make it black, and we're just going to leave it as the acronym MOP. It's the easiest way to put it out. So that's midnight opening price. That's 12 a.m. New York Eastern Standard Time. That's noon. So I live in New York. I should be sleeping at this point, and I best believe I'm sleeping. I don't trade around midnight opening price unless it's necessary for me. I don't even trade London at all. I normally just opt for New York because I get the sleep, or rather my sleep instead, and then I wait for Asian session. Many people that follow me know that I don't really trade London. You hardly hear me speak about the London time period at all. Come here. This is midnight opening price as well. And you'll notice that this price point is very sensitive as we continue to mark it off. Here on Wednesday, you can see how price drops below it as well. Midnight opening price. I'm going to do it like this. I don't know why I'm typing it out. Right there. Same thing here Thursday. Think how price drops below it a couple of times. Gives a reaction around here. I'm going to do a mark off Friday as well. It's up here. It's midnight opening price. So anytime the market was most likely running higher or rallying higher, there was some type of move below the midnight opening price or IPTA's true day opening price. According to ICT, 12 a.m. is the IPTA true day opening price for the day. Even though the new daily candle forms at 5 p.m., many people ask me all the time, what about 5 p.m.? The daily candle starts at 5 p.m. New York Eastern Standard Time. Is there anything significant about that? No. The reason why it's not significant is because anywhere between 12 to 8 p.m., so 12 p.m. to 8 p.m., that's a dead zone. And 5 p.m. lands between 12 and 8 p.m. You can see how most likely you're going to be faced with consolidation. You can see how price is choppy all along here. Choppy, 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 choppy. Same thing here on Monday. It's choppy. After 12 p.m., odds are price is choppy. But we can see where are the commercials most likely buying below in a discount. And it didn't last pretty long this week. It was very quick. And sometimes that happens. You'll just get a very bullish week and there's no opportunity for you to grab the best and ideal buy situation. Sometimes it happens so fast and it's earlier in the week. Like I said, it's normally going to land on Monday, Tuesday, or Wednesday, the low of the week. And then price is going to run up higher to Thursday or Friday, making the high of the week. So opposite spectrum. So it's going to open, run low, and then run up, have its range expansion, right? But there's going to be some type of protraction. There's going to be a fake move to induce retail traders to go on the wrong side. That's where a lot of traders are getting tricked up on. That's where a lot of traders are blowing their accounts. That's where people are constantly spending their funds trying to re-up into their live accounts because they keep blowing it because the protraction is getting them on the wrong side, and they're psychologically convinced that price is going to go lower. We can see here, let's say for Wednesday, you see how price drops down? There has to be some retail trader that probably thought to themselves, euro is probably going to get weaker going into Wednesday. And I'm just theoretically just talking about it. But I know someone out there that probably said, hey, I think euro is going to go short when they saw this drop down, some type of retail logic, some type of pattern, whatever it is on the lower time frame. They thought that this is probably going to go lower. And then price turns around real quickly. Now, a thing that I like to notice is that retail traders typically start the session because they're what? They're really outstanding and like ready to make profit, you know? They're like, yo, let me go make some money. The market is open, it's live. I could be able to make money right now, ASAP. That's not what you want to do. You want to sit down and actually think about what's going on in the price action. You don't want to rush into these things at all. You want to actually take your time and see what's happening and what time is it happening in. For example, we can see Wednesday. I can see that this is accumulation going into the Asian session, manipulation going into London, and then a distribution. If I turn on the session indicator, so I turn this on briefly, we can see here for Wednesday, look at how tight the Asian session is. Price then drops down below the Asian session low. That is where your ideal buy scenario is going to unfold. If you're bullish, you want to buy below the Asian session low. These are just pointers for those that are looking to be a buyer. So anytime you're thinking to yourself, have a couple checklists. One, is yesterday a small day range? I'm going to talk about this a little later in this session, but is yesterday a small range day? Yes? Cool. I could tell that Tuesday is already small range because it's not far from its open. It's pretty tight and closer to its open. Price isn't running away from its open. Thursday is a large day, I can tell. It's way above its opening price. You can see here Tuesday is close to midnight opening price, so it's a small range day. So odds are tomorrow we may have a large dynamic day. According to Larry Williams, there's only two natural cycles in the market, large and small, or vice versa. Large means small to large. We can see here small, large. And look how price gives a nice protraction, right? They're giving that Judas swing. They're luring all the retail traders to the slaughterhouse, bringing them all to the table and making them say, hey, I think I'm going to sell because I see price dropping. That's not the case. Commercials then step in and say, not in my house, and they turn it back around. And they run it all back up, getting back to the Asian session high. So if we were to look at this just real briefly, just these three sessions here, we'll drop down to the 15-minute. That's your classic right here. All right, we'll bring this back. This is your classic AMD that everybody knows from ICT, right? Accumulation is occurring here. There's sentiment being built up. That's what's starting here. So if you just bring this back a little further, just before midnight opening price, or just at midnight opening price. So we have that same concept. Nothing has changed from what I was saying, from Sunday's opening price to midnight opening price. Nothing has changed there, guys. These ideas are very fractal. Many fractals are occurring here. So this is a premium. Anything above is a premium. Anything below is a discount. I don't need an indicator to tell me when the market is overbought or oversold. The price action will tell you. This is a natural indication. This is why I say indicators are detrimental to traders and their development, because these indicators are lagging and these indicators cannot measure metrics of time. They're going to most likely measure volume, selling pressure, quote unquote. I'm putting that in parentheses. Selling pressure, or buying pressure. That stuff is not real. It's either the market making transactions, the algorithm liquidating one side, and then running towards where the large order of flow is. We have the Asian session high. Now, many people ask me, how do you break down a day? If you're going to go through an intraday, how do you break it down, Deontay? And I tell them just like this. I come to midnight, because that's the end of the Asian session, midnight, so we're going to consider that as well. So that's the Asian session low. right? There's sell side liquidity. Below that, you have the Asian session high. And we'll measure that. We're also going to measure, I just want to measure how many pips this is. So this is less than 20. Ideally, I would like to see it larger than 20, right? And then less than 40 pips to then for me to ideally want to trade London. That's how I know to avoid or to get into London if I was still trading London session. That's one of the key factors. I have a video on that as well on YouTube that tells you how to avoid London. I believe ICT also has a video out as well. That's where I learned it as well. But if you want to check out that video, you can. It's somewhere on my channel. Or you could just YouTube it and go onto ICT's channel and watch his video as well. Same points. I don't take all his points. I don't take everything from that mentor of mine, ICT, which is pretty much everyone's mentor. I don't take everything from him and apply it to my chart because I see certain things work better for me, situational, where I live, my lifestyle, things I got going on. Some things I just don't utilize as much. So we have the Asian session high and the Asian session low. Many people ask me, how would you trade intraday? How will you break it down? It starts right here. Got the buy side, and we got the sell side. That's how I would calculate it. Now, if I was being a buyer, I instantly want to be buying below midnight opening price, that's the first one, and below the Asian session low. I'm going to get a buying position below here. Now, many people may ask, well, how low is it going to go? I'm not quite sure. I can't sit here and answer that. That's something that other traders may say I know the answer to. But me, Deontay, I'll be here honest. I'm not sure how low the protraction may be. We can theoretically guess or use measurements. We can use standard deviations of the Asian session, right? If we take the Asian session high and low and do a standard deviation down, right? So if you had to take a box of this, high to low, and if you had to bring it down one like that, we could theoretically expect that if price action is going to go long, it would use a certain measurement of time. So it would take a measure of this and probably utilize this space here, one measurement down, one deviation down. This is where the low of the day is most likely going to form if it's going to be bullish, right? One standard deviation down. So this do it as one SD. That's where you would look to find a long position. Now, you can get a little fancy and technical. You can break this range in half, right, and get half of that standard deviation, and then you set, your buy limit or your buy stops or whatever, how you want to, and you wait for price to trigger you in long on weakness, and then you would wait for price to go higher. If you play price forward, we'll do this slowly. See here, boom, price breaks that. That breaks that low. So we know we're already convinced that retail traders are probably going to see this as, oh, breakout. It's breaking the Asian session low. It's going to go lower. That may not be the case here. It may actually be just doing that to get you on the wrong side. So if you go forward, you can see how price is teetering around midnight opening price, but eventually comes down. We're in that standard deviation once again, and we're going to measure that range in half just for you guys here so we can see that, what it looks like. You see how it hits half of that standard deviation there. And we'll keep playing it forward. But the thought process here, we've liquidated those that were buying and had a stop loss down here. We also now have a inducement of traders coming to the table thinking that the market is going to break down and sell. Retail traders are going probably full margin here. And I say this as a joke, but I know there's people out there that do this. They probably go full margin, convincing themselves, highly optimistic that price is going to drop lower, when indeed it may not. And now we're into the London session here now, right? So we're in a kill zone. So now trading is permitted around here. This is where most likely the low is going to form if it's bullish. This session is most likely where we're going to see price make the low of the day. And you can see how price trades back up quickly. Where did price trade to? Sell side, right back up to buy side. Very quick, right? So it takes out the Asian session low and it runs right back to the Asian session high. that throws a lot of traders off. Because now in their head, they're thinking, oh, this might be the breakout here. I buy here. But then eventually you could be faced with a strong retracement or deep retracement between 5 a.m. to 7 a.m., which is considered the London lunch session. Many traders tend to lose their mind in between 5 a.m. to 7 a.m. That little time period, 5 o'clock, 6 o'clock, and 7 o'clock, a 3 hour window there could be a deep retracement. And those that went long on the breakout could feel that. There are many ways to utilize this stuff if you know where to buy. If you miss this low, right? Let's say you don't catch the low, because you don't have to catch the low. Everybody thinks they have to catch the very low to make profit or make any type of results. If you miss this low here, but you know as a trader going into Wednesday, you're going long, you could just buy here and then place a stop loss back at the Asian session low. Because if price already liquidated all the sell stops at the Asian session low, odds are it may not return back to the Asian session low. So you can buy somewhere along the lines here at the Asian session high here and have a stop loss at the Asian session low, right? Or maybe 10, 15 pips below the Asian session low. Depends on the risk that you can take depending on your equity. That's what I would do here if I missed the low opportunity here. Moving forward, I would then wait for the New York session to then look for a potential retracement and then pull back higher. So we play it forward. See, we go into that New York session, right? Price comes down a little bit and then it goes higher, giving you that small retracement and then price running back higher. And you also notice some things here as well. Fractal ideas. We talked about midnight opening price. They're buying below at a discount. Cool. You said that a million times, Deontay. But they're also doing it for the session's opening price. So we have the session's opening price here. So if we scale down, I want to mark this off too. So we have a 15-minute swing low that was broken between the lunch period. So 5 to 7, 5 a.m. to 7 a.m. New York Eastern Standard Time, there's a swing low that's broken here. And what's below swing lows? Sell side liquidity. And as we go along, you're going to see how these ideas are fractal. This is just a lower time frame idea, but when we go to the higher time frame, you'll see exactly what I'm talking about. Price takes out this swing low during the New York session, drops below its opening price. So we're going to scale down. We're going to go right to where it broke it. I'm going to go down to the 1 minute. So I'm just dissecting this for you guys. It's not going to be perfect like this every single day. But see, that's that swing low there that formed between 5 and 7. Right here, that's 7. That's the start of 7 o'clock. So I'll mark this off briefly. 7. That's your opening price for, this is 7 a.m. That's your opening price for the New York session. Same thing applies here as well, guys. Premium versus discount. If you're going to look to buy in the New York session, where are you going to buy? Discount. I know many of you guys probably said it to yourself. You're going to buy in a discount. Correct. You want to buy below 7 a.m.'s opening price. It's the same ideology with the weekly opening price, monthly opening price, daily opening price. Same thing here. So you want to buy down here in a discount. Make sure this is neat. I'm a very visual person, and I know there's other visual learners here on the channel. Look at how price takes that out. After taking out that 15-minute swing low, I would scale down, me personally, same thing as the Asian session model, scale down to the 1 minute time frame, and look for the first fair value gap that forms. So we can see the first fair value gap that forms is here. Got that here. Now, do I know if price is going to trade down back into it? Not necessarily, no. But there are other fair value gaps that can form below discount. That's the key part here. These fair value gaps are forming below discount. So we have two of them. We have one fair value gap here, the larger one, so we're not confusing anybody. We'll take the small one off first. That's the larger one, the fair value gap here. You can see our price currently on what I have it at, traded into it. But then we also have the other one here, the smaller one that's down here. That's that fair value gap. So either one of these could be a new opportunity for you to go long after seeing the 15-minute swing low taken between 5 a.m. and 7 a.m., the lunch period, the London lunch. That's what's that between these two highlighted areas here and here. This area that's not highlighted, I don't trade, guys. There's no trading opportunities for me here. Not to say that you can't make profit here. I just think it's not ideal to trade here because one, it's not a kill zone. It's not where the algorithm is most likely going to be in shooting and injecting volatility into the market. It's not going to happen in this time period. It's most likely going to be a deep retracement, a trending environment to just trends up, or it's going to be consolidation. The fact that consolidation is one of the options, it makes me stay clear of it. I don't want to face consolidation. I'd rather face something like a retracement back into an expansion. And that's most likely what's going to happen in the New York session, especially on a bullish day. And if London already is setting the tone for going higher, New York may give the same expectations. So you play it, and you can see how price trades into that fair value gap multiple times, comes back down into the original one, the first one. So sometimes you got to be patient because that setup can come. You see how it trades back into that first one. So we'll get rid of the larger one above price. Comes back down into it. That's that fair value gap. I would be looking to go long. Now, many people say, what's your parameters here, Deontay? Risking 1% to 2%. Like I said, I'm not going to tell you exactly every little thing to do because this is something that is publicly known for other traders on many forums like baby pips, you know. We'll take this session indicator off so we can see it. You got to make this a little brighter so we can see it. Here, I'm looking to go long right at the start, at the end of that fair value gap here. So the premium side of the fair value gap is the top side and the discounted side. We don't know how far into the fair value gap price is going to reach. Sometimes it just taps it perfectly and then it runs higher. Sometimes it's just the midway point, then it goes higher. Sometimes it's the whole thing right at the bottom, then it goes higher. Sometimes it's more and it drops down. But I use a cushion of risk. At this point of my entry, I'm looking for anywhere from 10 to 15 pips of an SL. All right, so let's just measure off 10 pips. All right, let's just measure off small little 10 pipper. There we go. Now, my most ideal situation is a 1-to-1, right? So if I'm risking 10 pips, I'm going to gain 10 pips. I want to gain 10 pips as well. So we're going to pull this up to 10 pips. Get this to a 1-to-1 scenario. Where are we at? Right here. So you can see here it says a 1. That's a 1-to-1. So I'm risking $1 to gain $1. That's how I like to gauge most of my trade setups. I don't try to look for huge runs. If I could get that 1-to-1 setup, I will be happy. Price now should be expected to go higher because we swept sell side liquidity, equal lows. Look at these clean lows here, engineered all in between that time period. Equal low, equal low, equal low, equal low. Retail sees this as what? Probably a support zone, right? Price hits it, but price breaks above it, breaks below it, and they probably see that, oh, this might be a retest, right? Break, retest, go short. Like I said, retail logic may not always apply in every situation. I don't trade based off of retail. Press play, and we'll watch price. And as you can see, we clear the 1-to-1. So 10 pips profit. Just like that. You could bank that. But many people aren't satisfied with that. You know, many people want more. And that's where greed comes into fact. And you have to really psychologically tell yourself, hey, you did a good job. Pat yourself on the back, bring it all home. You know, you make your money, come back home. Don't stay out there working, and you're actually deteriorating yourself and wasting your time staring at the screen and hurting your eyes. Get in and get out. I don't waste time anymore. I've been doing this for a while now. I know what I like. I just don't want to waste my time. I'm in and out. I have other things that are more important. You can see how price trades up, and we potentially can scale this. So that's a 1-to-1, right? So if we would have to measure another 10 pips above this, not perfect, right? Another 10 pips. What is this? Right here. Just got a 2 to 1, right? Just made a 2 to 1 from a 1 to 1 scenario, right? Another 10 pips, so that's 20 pips up there. Measure that out. 20 pips. You got 20 pips. So if you have a trailing stop now, right? Let's say you take partials, and if you're not able to take partials, you just collapse your trade and you take whatever you have off of your micro lot. But if you had a larger position where you could scale out and take partials, you'd have a trailing stop. And where would your trailing stop be? It probably reside below a swing low formation. Right, that's a swing low. 1, 2, 3. That right here is a swing low formation. If it's going to continue, if it's going to continue to go higher, the swing lows are going to be protected. The algorithm is no longer going to want to seek the sell side liquidity below the swing lows. It's going to protect it and leave it alone. So you could trail your stop below a swing low after you reach your target. So let's say you got the 10 pips, you trail it up into profit, risk free at this point, and you hold for higher prices. And you'll notice how on this 1 minute, look at how price creates higher swing lows. That's a higher swing low. That's a swing low. That's a swing low. It's higher. This one is higher. 1, 2, 3. 1, 2, 3. Same fractal idea. Same thing up here. There's a swing low, higher swing low. 1, 2, 3. That middle candle is the swing low. I'll mark it off so you guys can see it. Make it a little bigger. Blue here. And here. See that? That's a higher swing low. You have a bullish trend on your hand. And there's many ways to see this sometimes. It doesn't have to be the way I just showed you with the 15-minute swing low broken, price going higher. There's another way you can probably comprehend this. And another way I would see it as, you wait for price to break a swing high. And you can see here, that's a swing high formation. 1, 2, 3. That middle candle is the swing high. Let's zoom in for those that are blind, like me. Swing high, 1, 2, 3. We'll make this red. Color code it. That's the swing high. What happens when a swing high is broken? This looks just like the daily bias that I'm telling you guys that happens on the daily time frame. What happens when a swing high is broken? You wait for what? A higher swing low. That's the lower swing low, or the swing low that we have after breaking that swing high. We want to see something form higher than it. That's the higher one. 1, 2, 3. And notice where this higher swing low lands. You do a box for it. Fair value gap. Bingo! Got your fair value gap right there. So price trading back down into fair value gap, another opportunity to potentially go long. Now, many people may say, oh, but what about 7 a.m. opening price and midnight opening price? You're not going to always get that ideal buy in the discount. You may miss it. You're going to miss it because price is moving. It's not going to last long. Discount prices, I want you to hear this, discount prices are not going to last long when the commercials are buying. The discount prices are only there probably for a couple of moments of time. Sometimes when the news comes out, you get that huge spike back down into the discount and then price runs back up, right? It liquidates anybody that was buying into profit, shoots out their stops, runs the stops one more time, and then goes up. So it would look like this. What I'm trying to say is sometimes price will come down below discount, right? Boom. You may find, some people may find a buy, right? And they're in profit right here. Let's say they got that first fair value gap here that I mentioned. Boom, they're in profit. And let's say it's going up and then news hit like CPI or something comes out or interest rates come out, right? The European Central Bank decided to decrease their interest rates by 25 basis points. You might see a quick snapback, right? Quick rundown back into discount again, and then price runs high. You'll notice this as you trade. You'll see these things happen often again. They run all the swing lows again, and it looks like it's going to drop. What happens to retail traders? They go chasing it. So like this, right? They're in profit, and then all of a sudden, you get that huge spike down, right? You get like 2, 3 large candles down, boom, or one large 1 minute candle down, stops everybody out, hits your stop loss, right? And then that automatically, psychologically, because I know it triggers something into people. They look at that as like, dang, I just got liquidated. They just took my money from me. And the market is now running in the opposite way. Ah, man, I got it wrong. Ah, I should have been listening to this guy that said EU was bullish or EU was bearish or whatever the case may be, right? then you psychologically get yourself in trouble, and then you jump back into the trade trying to go short, and then instead it goes back up. I'm telling you, this stuff happens all the time. All the time. But before I go on a little rant, we're going to continue keeping this going. But you can see how higher swing lows are being formed, right? Higher swing lows. And look how they're protected. That swing low is protected here. That swing low is protected here, and price is going higher. Meanwhile, the same pattern is occurring as well. Look at this. What is this being broken? A swing high. That puts me on alert. All I have to do is wait for a higher swing low. And you can see each one of these blue lines is a higher swing low. This one at least. This one isn't. Actually, no, that one is as well, because that's the one that liquidated here. So we have, let's check the low here. Actually, this is a double bottom here. These lows are the same. But let's say in theory, if it was a swing low, this low was a little lower than the one on the left. It came down a little bit. This would be higher. This would be lowest. And this would be higher. That would be higher. That would be higher. And that would be higher. Same thing keeps happening over and over again. It's a quick pattern. Easy pattern recognition right here. Look at that. Swing high broken again. What do you wait for? Higher swing low. Pull back into what? Most likely a fair value gap or down closed candles. Or the actual swing high itself. Price pulls back into the swing high itself, and you use that as what? Your potential price going up and mitigating, right? Price going all the way back up. And that's how I normally go through intraday. And that's how I read price action generally. It's not really complex. It's a very simple approach that I like to look at it from. And I know that if it's going to go higher, like I said, these lows are protected. If we play it out further, we'll see what we get till 10 o'clock. All right, so we're getting later into the day. Let's speed this up just for the video's sake. And we'll get to 10 right here. So this is 10 right there. And you notice, once again, I could go in here and mark all of them off. But odds are, look at how all the swing lows are most likely protected. And if they do ever break a swing low, it could be just a false break. Many people ask me, what happens if a swing low is broken? Well, if a swing low is broken, you just do the inverse. Wait for a lower swing high. So what I'm showing you here, just inverse it. And we'll talk about that as well. But if they run a swing low and they don't give you a lower swing high, then it was just a false break. They just did that to probably get you to think that price is going to drop. So right here, look at this one here. Got price breaks that swing low, right? But it doesn't start a new trend. Breaks the swing low, doesn't start a new trend to go lower. No, instead it's just a false break. False break, get back into our original trend or our higher time frame draw on price. That's what's occurring, guys. So hopefully that makes sense. So just to go back, I'm going to clear this off. Now it's like a lot on the chart. Shout out to TradingView. We'll just take off the replay function. As you can see, that's how it goes. And generally, every other day, if you're looking to buy, it's going to land below midnight opening price. The ideas don't change. They may come at you differently. You know, week to week may be different. Some weeks are not this concise. You know, you don't see it make a low and then run away from the opening price. Sometimes some weeks are like that. You're going to run into that sometimes. It happens. And sometimes how do you gauge whether or not you're going to run into a week that's going to consolidate like that? If the last 3 weeks were very large, odds are you're going to run into a week that's like really tight. And it's not going to move far from Sunday's opening price. So we got the low on Sunday and the high on Friday, opposite to the DXY. So if we look at something that is also directly correlated with EU and inverse to DXY, it would be British pound versus US dollar, GU. And we can see here, like I said, ideally buying discount one of these 3 days is going to be the low of your week. If you had the perspective going into Friday or going into the weekend, you did your homework and you said, I think GU is going to go higher, and you speculated, you can see here, Monday does it. makes the low of the week. Here, Friday makes high. So it's opposite. So on two opposite ends. It's moving away from the opening price. So it comes down, right, up here, and then it closes. That's what it will look like in a, what's the word, a bar, essentially. So it opens here, drops down, runs up, makes the high, comes off the high, and then closes off. That's what the weekly candle is doing. This right here is your ideal buy scenario, right below the opening price. Then you have your range expansion right there. Range expansion. It's pulling all the way up. That's what's happening here. That range expansion throughout the week. You get the high, and then you get that pull off on Friday. Normally, you like to see the high on Thursday. Sometimes it happens on Fridays. So you might get an extra mile on your longs. If you found a good discount buy, you may really be able to milk it all the way to Friday at times. But normally, I say by Thursday, let's say Thursday London close, let's say Thursday New York session, or even latest Friday New York session, take your profits, man. If you made a substantial amount of pips, whether it's 50, 60, 70 pips by Thursday, take something off. Pay yourself, because going to Friday, what if you get a Friday hard pullback, right? A lower close. What if the close is very low, right? Instead of the close being up here, let's say the close came down a little lower and then it closed down here. That would eat into your profits. And I know that would probably make some people a little upset. I know that would upset me. Because if I did the due diligence and homework, why would I allow the markets to take it away from me? I just took it away from you guys. I don't want them to take my money. I want to take the market's money. That's the whole point of it. So you can see, discount, buy. AU, similar as well, right? AU is a foreign currency. And when I say foreign currency, I don't know why they do it. I think it's really like hypocritical, but they always say it's dollar versus foreign currencies, as if because the dollar is the world reserve currency, everything else is foreign and whatever. All foreign currencies, so anything that's based, right? So the U.S. dollar, not based, quoted in U.S. dollars. So this is the base currency before the slash, the first three, right? AUD. That's the quoted. I mean the base. Sorry, I always say things backwards. The base currency, AUD, right? And then the quoted, it's quoted in US dollars, right? Foreign currencies are most likely going to gain strength if the DXY is going down. And we can tell, right? With the DXY, let's go on the 1 hour real quick. So put it side by side, inversely correlated. Get a nice frame of it so you guys can see that. Completely inverse, right? Completely inverse. So it's nice to know how to utilize correlated and inversely correlated pairs because they can help you. They give you an edge. It's not much, but it gives you an edge. You utilize these other things. I've only been trading EU, but I've been utilizing GU and AU, not really New Zealand dollar versus US dollar because I don't really like to look at that pair, but I've been utilizing mainly GU to gauge where I think EU is going to go. If GU is going higher, odds are EU is going higher as well, and AU is going higher, and NU is going higher as well. So get something that's inversely correlated to the foreign currencies and directly correlated to the DXY. We can see here, this is UCAD, right? We got the base currency in US dollars and the quoted currency in Canadian dollars. So you can see it's going down. So that would mean Canadian dollar, the quoted currency, is gaining strength, and the base currency is losing strength and falling in weakness. So there's weakness in dollar and strength in Canadian dollar, and we can see it reflects in the price action, the price going down. Given the hindsight, we can see premium discount, Sunday's opening price or weekly opening price, the high of the week right here, Monday. And then price breaks down. So you can see the ideal sell scenario, it's above the weekly opening price. So you're probably going into this week, not saying you're going to get it right, but if you had your daily bias correct and you knew that dollar was getting weak and you suspected dollar to get weak, that means UCAD should most likely get weak as too. UCAD should go down You're going to sell above Sunday's opening price or sell on a Monday, Tuesday, or Wednesday. And you're going to look to take profits around Thursday, ideally. And that's essentially the weekly range review. Pretty classic things that I do, pretty standard procedure. I don't ever not use Sunday's opening price. I use this to gauge myself all the time. So now we're going to jump right into the next part of this. It's the IPTA data range review. And those that's been following me as well, you guys know I use this consistently. Now, if you've been following me with the daily updates, I'm showing you essentially a swing trade. So those that know, I caught a very great swing opportunity below the opening price. No, actually, it was pretty close to the opening price. It wasn't exactly in a discount, I believe, but it was pretty close to the opening price. And I was able to ride this up higher. Now, how did I get to this idea of price going higher? How did I get all these lines on my chart? Well, the way I got it was I start with June 1st, as always, and then I go back 20 bars, just like that. And then between this here, from June 1st to here, May 4th, the 20 bar look back, I find the highest high and lowest low. So it's here, the lowest low here, the highest high is here in that red line. After that, I go back 40 bars, do the same thing between this quadrant, here and here. The highest high is here, the lowest low is here. Then I go back 60 bars. So from here, drag it all the way out, 60 bars. Highest high within that quadrant is here, lowest low is here. At that point, I gauge myself to see whether or not the macros or the seasonality is going to tell me whether or not euro is going to be bullish or if dollar is going to be bullish or bearish, vice versa. We know for this month that euro for June was going to start off bullish, and it said that it's going to end bearish. Vice versa for the US dollar for June, it was going to start off bearish and then flip back bullish. Many people have asking me, how high is EU going to go? I have no idea. I have no idea. But all I know is that if price action is going to tell me, it's going to turn around, because people see this and they think, oh, it's over with. It's hyperextended. It's too high. It could continue going higher because we've seen super bullish trends before. If you've been trading Forex or stocks or commodities, cryptos, you've seen bullish runs go on for months, for weeks, for days. Does this mean price is going to now hit this and then drop to the pit of the earth? No, that doesn't mean that. We just would wait for what? The signs. Swing low broken, lower swing high. And that's what we've been following with our bias here. So I'm going to blend a little bit here of the third idea or topic. I'm going to blend the IPTA and the daily bias review here together. So at this point, I know that I have the Sunday's opening price, June's opening price. That's how fractal it is. I could call the Sunday's opening price if I wanted to, but this is the opening price for the month. That's going to be my natural indication of overbought and oversold. So if you're new to me, or you're new to this idea of style of trading, start marking off the opening price for the week, the day, the month, or even the year. And you'll notice there is going to be a protractionary phase. There's going to be a fake move. And we can see that fake move was here. Look how price comes up at one point in time, then drops, and ever since that, back up. But here, I'm telling you, I've had messages, I have direct DMs and stuff like that. People probably message me, I think you're wrong, Deontay. And I could be totally wrong. I don't ever sit here and say, dang, you know what? I actually was also thinking it was bearish as well. No, I always pick a stance. I always leave uncertainty though. I leave a room of cushion of doubt. Like, I could be wrong. But I'm not super optimistic. But I know the signs of a bullish trend. And a bullish trend is normally going to show you price dropping below the monthly opening price. So this is a bullish month idea or ideology. Price creating a swing low formation below the opening price. That's most likely where the commercials go their heaviest net longs. It's the most common thing that I see in a bullish month. There's a swing low that forms below the opening price. Price then makes higher swing lows. So you got HSL, which stands for a higher swing low. That swing low is higher than that. So that's signs that it's most likely where the commercials are repositioning themselves to go long here. You can see here, the swing high is broken. This is the same thing I was showing on that 1 minute chart on that Wednesday for EU. Look how this swing high is broken. What do you wait for after that? A higher swing low. Right there. 1, 2, 3. And then you look to go long. And you also have that high probability scalp model here. It's also a video on my YouTube channel as well. ICT talked about it as well. I learned it from him. But there's some things I don't use or include or exclude. I just keep it very simple. But there's a high probability scalp opportunity here. I'm not going to get into that right now. We'll talk about a little more of those fun things towards the end of the video. But see how price continues to go higher. And what is it targeting as it's going higher? Swing highs. Right? This swing high formation has what above it? Buy side liquidity. There's money resting above that swing high. Same thing here. That swing high here has buy side liquidity above it. And same thing up here. What's that? Buy side liquidity. So that's potential targets going up here. You also notice IPTA, like I said, these highs and lows, even though that they may have been broken already, because some people may say, why are you looking at this low if it's already broken, Deontay? It's already broken multiple times. But notice how price comes right back into it and closes right at that line. So this swing high, there's a red line here, but then that blue line is also there, so it's stacked a little bit. But that blue line for this 40-day look back, the low, look at how this daily candle right here closes right on that candle's low. I'm going to look at what this low is. So this low here, we'll take it out so it's easier because I don't have to try and remember it. That's the low of that swing low here. And then the close of this candle, we'll just hover it. The close, so if you look up here, for those that are a little lost what I'm talking about, the C here, trading view has open, the O, H, high, L, low, C, close. All candles have an open, high, low, and close. There's no ifs, ands, or buts about that. Right here, we're looking at the close. Look at where the close comes in at. Look at that. 1.08316. That's the close. Look how close that is to that line. Isn't that a little strange? Doesn't it seem like it was an accident? No, it wasn't an accident. It was very intentional. They wanted price to come there. Look at the open of the next candle. Look at the open. Look at the opening price here. The opening price is literally the same thing as the close, but it's right around this price point. And look how it gets away from it. Gets away from that low. Closes here on that low, the 40-day low, and then opens close to the 40-day low and runs away from it quick. Without hesitation. Opens, drops. You can see how it drops down. This large candle drops down. And then it runs all the way up here. And that's how I was essentially breaking down many of the months that you see on YouTube or even TradingView. So if you go on my YouTube channel, there's a playlist called the Daily 2023 Daily Tracking. I believe I have it titled. They're very short and concise. They're like 2-3 minutes. If you go through it, you'll see my thought process. It's very quick, especially from the daily perspective. Very quick. I don't take too long to figure out whether I'm going high or low. I know people that spend hours trying to break down the chart. I'm like, it's not necessary, because once you figure out that the market is all comprised of swing highs and swing lows, accumulation, reaccumulation, consolidation, expansion, reversal, retracement. Once you figure that out, you're on this market. You're on these charts real quick. In, out. Look at how price runs all the way up here and pulls all the way back down, and it looks like it's going back up. What is that? Got price going all the way up, coming back down. What's happening here? Look at how it looks. I'm just going to draw this here. I'm going to leave it open-ended. You can answer this yourself. What is going on here? I know many of you guys that have been trading have probably seen a chart or picture like this. I'm drawing it right there on the daily chart, showing you what that looks like. Obviously, it's not to scale, and it's not going to be perfect, but think about the idea and the processes and the psychology behind what's occurring here. What everybody mentally is thinking about at this high here. What everybody's thinking about mentally at this point. What everybody's thinking about at this point here. And what's potentially going to happen in the near future. What's going to happen. I don't know what I drew right there. But I'm going to leave that open to you guys to interpret. If we look at this inversely to the DXY, same thing is occurring, guys. Nothing changes. I'm doing the same thing. I'm starting June 1st. Everyone asks me this. When do you start, Deontay? The first official trading day of the month. The first. So, like, let's say the first, this is June 1st. Let's say June 1st landed on Saturday. I clearly wouldn't use June 1st. I can't use June 1st then. That means I would have to wait, June 2nd and Saturday. So June 2nd would be Sunday. June 3rd would be Monday. That would be my official trading day then. Monday, June 3rd, right? If this was Saturday instead. I would have to wait for June 3rd, Monday, to then start my IPTA look back data range. And then I would do that. And I think, May didn't have it like that. See, April, did April do that too? April, look at that April here. See, April 1st probably was what? Like I said, April 1st is probably a Saturday. And you would have to use, for April, I would look back from here. That would be the official trading day for that month. Because if you look back, look here. That's March 31st, April 3rd. The official trading day of the month. Look back then. So here, the first trading day is June 1st here. Look back 20 bars, 40 bars, 60 bars. Find the highest high and lowest low in each one of those quadrants. And then speculate your macros. Understand what you're looking for. Look at inversely correlated pairs, and try to see what the seasonality chart is telling you. Has it been following the seasonal chart for the last 2 months? Yes, then odds are maybe this month the seasonality chart will follow this as well. And we can see dollar was supposed to get weak for June, and we can see price is breaking down as well. And I think I can pull that up for you guys. Let's see if I can get it. So this is the website I go to get my seasonal charts. So I'll go, I think dollar. It might take me a few times because I always forget. US dollar, or what I type in, or DXY. Sometimes it's something. DXY. Which one is it, Deontay? This always happens to me. US dollar. See, it's normally US dollar to, I don't want this, I want something else. DXY. Can't even spell. Sorry guys, bear with me. You have the luxury to actually skip through this. I don't. My stupidity. Dollar index. Yep, so it's the dollar index. I'm always doing that. Look how June drops. See that? It drops down sharp. So that's what I was suspecting going into the month. You can see how it rallies back up. People look at this chart and take it forward, month by month. They think it's going to be exactly perfect. Like June, somewhere along here, it's going to rally. People are trying to gauge this too. Like, I can't gauge the time period in it because it's not drawn to scale almost, It's not like I could tell if this is the middle of the month. What day is this where this drop is coming down? Like, what day is the low of this? I can't tell. But I could for surely see that there was there's supposed to be a sharp decline from May to June. And that's what I was expecting going into the month. June dropping lower. And that's what we see reflecting here on the price action. June, price dropping down. Now, you can see June is also rallying. Does that mean price has to follow that? No, it doesn't. It could completely negate what the seasonal chart is saying. The currency pair or the commodity or the cryptocurrency or whatever is the stock doesn't have to follow the seasonal chart. There are ample of examples where the seasonal chart is not in accordance to the price action. It totally ignores it. And I have people text me and say, oh, but it didn't follow the seasonal tendency this month. Cool, that's okay. But were you able to comprehend what the price action was doing? Were you able to still find some type of swing setup, some scalp setups, some great days to buy or sell on? That's what it's really about. Even it doesn't matter the condition, right? You may think dollar's supposed to be going up. Let's say it doesn't. You have to change your perspective. Are you going to keep convincing yourself that dollars going up, dollars going up, dollars going up, and you see day by day, you keep getting down close days. Price opens, drops down, closes with a down day. Price opens, closes down day. Price open, closes down day. Eventually, you're going to have to tell yourself, wow, I need to get on page, or I'm going to keep losing my money thinking that it's long. And we can see if you follow the same concept but inverse, right? All the ideas that I show you is fractal. Same concept but inverse. June's opening price, like I said, opening price, natural indication of overbought and oversold, guys. If I'm going to sell in this month, I'm going to sell or try to find a sell opportunity above or very close to the opening price. That's where my ideal sell scenario is going to unfold. Here, up and above, close to the line or above it. That's where my sell is going to occur. You can see here with hindsight, that premium sell, the higher prices before price dropped lower, didn't last too long, guys. It was here for 1 day, 2, 3, 4. Only 4 days were you allowed to catch the DXY in a premium. Think about that. 4 days. Only 4 days so far. And I can't make this up. It's not like I'm editing Trading View and I'm that advanced in like software editing and stuff like that. 4 days. 1, 2, 3, 4. 4 days it took. And then it finally said, you know what? You guys don't want to catch my drift. See you later. You're not going to get that high sell opportunity. Because this is what makes some traders different from others. They're able to catch the high or the low before that large leg. And that's that small edge that I'm showing you how to find that edge. This is the edge that I have. I know that I have to find the sell here. If everything aligns, it's most likely going to be in the form of a swing high, right? A swing high formation is going to form above the opening price. That's where the commercials are pulling it up. Hey, we're going long. And then they trick everybody. We're going short. You got you. That's what they're doing. And what happens? I could already see heads up here earlier, insight, lower swing high, right? You got that break of a swing low. SL stands for swing low broken. Wait for a lower swing high. That and that lower swing high, that's the retracement. That's where they're most likely getting into their net short positions or increasing their net short positions. And we can tell that that was probably their heftiest net shorts because look at where price is now. It's down here. That means they had to been going short here and here. Going into the previous month as well, the last bit of May, because that's the highest high we had for a while for the DXY. Last, 3 weeks or so? 3, 4 weeks or so? Yeah. That's the highest high we had. Price is dropping. So that's probably where they really got into their net shorts here. Here again, right? You see? It's still small pullbacks. But these small pullbacks get traders very optimistic into thinking, oh, abandoned ship, price is actually not going to drop. It's going higher. No, it's not. It's actually going lower. That's what price is doing here. It's going lower. So hopefully that makes sense. And you can see I was able to call that draw down here. If you're following the daily updates, I'm not making this up. The draw was to these swing lows here and here. And we got to each one. You can see as well, if the data range, even though this 40-day high is already broken here, going into this month, we're still utilizing it. Going into June, we're utilizing that high. Look at how price trades down into it. Look at that reaction there. So that's that 40-day high here. So we're not confused. That red line here. Red line. Circle it. Look at that reaction. Look how price trades down to it. Bing. Runs away. Look at that. Quick scalp opportunities. This is what I wanted to show you guys. Because it takes a couple of weeks for these things to unfold. And sometimes I may not see it because I'm looking at a different pair. Or sometimes I just miss it or overlook it and forget to bring it up. But this is another way to utilize IPTA. This could be a scalping opportunity. Not for the DXY, of course, but let's say another pair, right? Because most people don't trade the DXY itself. I know some brokers or some platforms allow you to, but I wouldn't suggest it. Price trades down into it, right? And look how quickly it reacts from that high. That old high, it runs into it and then runs higher. Just like that. and then eventually price leaves it again, once again, and runs right through it. But those are the small things that can give you an edge. You may not be the most profitable in the world. You don't have to be successful here. You just have to know a little bit. Take a piece of the pie, take it, and run with it. Don't get too greedy. I'm probably expecting the DXY to probably give a small pullback eventually. You have multiple swing lows broken. We need probably a lower swing high to come in. So another one here, short-term rally, price probably drop lower. Take out. There's a swing low here that I didn't mark off here. 1, 2, 3, right? You also have one here. You have another one here. So what is this? Because people trend line. People come here and say, I got a trend line. And I don't ever draw trend lines, like ever. Not even for the phantom trend lines. Like, I don't even do it because I just think it's pointless. Price there. If you do it, so be it. Like, hey, rock out. You know what I mean? I never want to discriminate against your style of trading. All I'm telling you is do not use retail logic and indicators. That's all I'm asking people not to do. And you'll see a big difference. Once you take the indicators off, you read it raw, man, it's night and day. It's like you've uncovered a new world. You stepped into a new dimension without the indicators. Take all that fog off your glasses, right? Wipe it down and remove the indicators. Get rid of all that cully, flashy stuff and buy signal, sell signal. Like you hear people, you'll see people's charts. Buy signal, sell signal. No, you're the indicator. You yourself, the human being, not the AI robot. We're going through this AI phase too in the world. AIs, not you, not the indicator, but you yourself is the indicator. You're the indicator. You should be indicating to yourself, oh wow, today is a sell day. How do I know? Because blah 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 blah. Boom, get in, whether you're right or wrong, And even if you're doing this for just the sake of, learning, jot it down. Don't just look at the chart and not write down and study it. You want to be able to reflect, take a screenshot. I have binders. I'm going to take a picture and put it in here when I go back to edit. I have binders, guys, of some of the models that I use. I haven't updated them recently, and I will. Normally, I update it towards the weekend, and I print out certain things that I've seen throughout the week or the last month or so that fits the description of the model, and I was like, wow, that was a very great thing to know. I put it in the binder, I close it, because that's my catalog, that's my database, guys. My Deontay's personal database will never be out for free. Never be out to sell. Technically, you have my database because TradingView is one of my forms of logging myself. But my personal binders is my database. So I could look back and say, wow, this happened before. I seen this before. I know when this happens. Oh, it's a bullish month, seasonal month. It says the seasonal tendency said it's bullish. We have a month that looks up or down. We're going into June. Same thing happened last year. I have it down. I don't have to go searching for it. I can just go in my binder, flip through a couple pages, be like, oh, look, this happened. 2023, June? Yeah, this happened before. It's going to happen in 2024 again, too. Not to say it's going to, but you understand or you get my drift here. Take it a little more serious. Treat it like class. Treat it like a class. Treat it like you're getting your master's program or your bachelor's or even your high school diploma. Take it serious. Take it serious, guys. You're not here dilly-dallying and wasting your hard-earned money. Your money is your life. That's the world we live in. It's harsh reality. Your money is your life. This is the way it works in this world. You can't get that time back. You sacrifice your time for those little paper notes that they give you from the bank, wherever you live in the world, whether it's euros, pounds, yen, New Zealand dollars, Swiss franc, US dollars, whatever it is, Canadian dollars, whatever it is. I'm trying to shout out all the currencies. Shout out to everybody that's supporting me globally that's not from America. Shout out to you guys. And shout out to the guys or gals that are here in the States too supporting me as well. But it's really cool to see globally, I'm contacting people from around the world or reaching people around the world. It's really nice to see that. Take it serious. Time is money, and you can't get time back. So if you're buying these prop firm challenges and you're blowing your accounts and you're keep trying to find money to fund your account, take it more serious. Take a break. I've taken breaks before. When I first started trading, I started live. I was like, "Yo, Deontay, you can't waste your money. You can't be doing this. You got to learn how to actually trade first. Learn what actually is going on in the market, then come back in with a new position, fresh mindset, and you just get after it. You get after it, guys. You get after it." But enough of the rambling. We're gonna jump right now into interest rate differentials, and we're gonna talk about the yen cross pairs. So let me just go over to the yen cross pairs. So let's just say we're going to, the first thing that comes to mind is always UJ, yen cross pairs. I'm going to remove this. You don't need this. And given what we could see right now on the chart, right, last basically 5-6 months, right, beginning of the year, basically 2023, UJ's been bullish, right? This is the start of the year, right here. I think it's January 2nd here. Yep. Because New Year's is a holiday, so markets are closed. The second day it's open, so boom, yearly opening price. So what I'm showing you here is the yearly opening price, guys. Where's the magnet tool? And then you start to notice how this idea is fractal. But this is not the main topic of what I want to talk about. But just before we get into it, that's the yearly opening price. Look at what they did here. Many people don't see this stuff. It's just about your perspective. Look at that. Look at where they brought UJ. Isn't that kind of nuts to see that, right? I've been showing this on the lower time frames or a different fractal idea, the weekly chart, the weekly range review. I've been showing that the same thing here. Isn't that a little crazy to see that they did it here as well? Right? January, they bring it all low. They get everybody to think dollar's gonna go crazy and drop and drop and drop and drop. And what did they do? They buy it back. And then the trend starts to change, right? Swing highs are broken, higher swing lows. And you can see another opportunity here. Look how it dips into discount again. Once again, boom, runs away. That means the commercials most likely went net long again here. Net longs, net longs. All this is new net longs. Net longs, net longs, net longs. Anytime I see price come back down to the yearly opening price, net long, and then give a move away from it, yeah, definitely you can tell that it takes common sense. It's not rocket science. It's that the commercials, the people that actually control the market, they probably were buying down here, 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 and here. That's what they were doing here. And now what is price at? Price in a premium now. And is it probably trying to reach a certain area before it sells off? That could be true. What do we have in price? We do have this large price action here, right? We have this here, that fair value gap there. Right, that's SIBI, sell side imbalance, buy side inefficiency. But we're not talking about PD arrays. We're talking about interest rate differentials. Now, I'll pull up a website that I use, right? So this is the website, globalrates.com. I'll leave this in the description so you guys can actually easily access it or drop it in the comments. This is where I find the rates for all the countries around the world, right? Now, interest rate differential, you're not going to get free advertisement on my video. Interest rate differential is essentially you're taking a country's interest rate and another country's interest rate, and you're trying to see if there's a difference, and if there's a major difference, right? If there's a difference in general, it's still a differential, but if there's a large difference, then it's way more significant, depending on the country as well. So like GDP and stuff like that, those things matter. Some countries, and this is not to say that where you live, because I don't want to offend anybody. I love all the countries around the world, but depending on where you live, some countries hold different economic statuses around the world, depending on world trade, what they provide as resources and stuff like that, what their GDP is, what their population growth is, what's their expected population in the next decade, the next 2 decades, etc., etc. Those things play a role. So the Feds currently, right, unchanged. I think they just did an unchanged rate recently. I think they didn't raise it. The last decision was on, I don't think this was the last decision. I think recently, I would have to double check, so do your due diligence on it. But I think the Feds recently had an interest rate decision. They decided to keep the rates the same this month of June, unless they didn't update it on the website yet. You can see there's a difference between this country, right? United States Fed, the central bank in America, and Japanese yen. The yen, and I'm always going to go back to this one because it's, according to the list that we have here, out of this list, there is no other central bank on this list that has a negative interest rate. Listen to me closely. They have a negative interest rate. Let me give you an analogy. You answer this yourself. If you had an opportunity to put money into a savings account, would you rather put it into a savings account that had a 5.25 or 5.25 interest rate, right, on your money, or would you rather put it into an account that had a negative interest rate on your money? So a decline, if you put your money in it, you're actually getting a negative rate of return, ROI. I think most people, and I can't speak for everybody, because some people disagree with me, but I think most people would say they would rather put their money into a savings account that gives them a positive rate of return. Is that not fair? And I think so. I think that's very fair. I'd rather put my money into American dollars, or the United States, quote unquote, than Japanese yen. Now, think about this. Last time Japanese yen has changed their rates was 2016. It is now 2023. So few more years later, right? They're still negative. So they went from a zero rate, right, to a negative rate. Someone over there in the BOJ stands for Bank of Japan. Somewhere over there, they came to a decision, they came to a consensus to say, we're going to put a negative interest rate on the country, right? Our rates are going to be negative. Let's see what happened since 2016. So where is it at? So we're going to clear this off. We're going to go, let's just do it, quickest way to do it is monthly. Let's go back to 2016. Right, started 2016. Right there. 2016. 2016, Bank of Japan decides to go negative rates. You'll notice as the rates went negative for the Bank of Japan, other world countries either had a very flat rate or zero rate, or when COVID started coming around, we went to lockdowns, we came out of it, and then we had inflation, this, next, and the third. What happened? Many central banks wanted price stability. They said that the only way to get price stability or to control inflation was to increase their interest rates. So they start increasing the interest rates, and what happens? More people start investing into that currency. More money starts flowing into it. More yield starts flowing into that currency. What happens to UJ? Super bullish trend occurs. Look how quick that is, right? Look how quick price takes all the way up here. Very quick. And this is, I'm not sure if TradingView is tracking the entire history of UJ when it's first officially tracked, but this is the most, I guess, whatever plan I have paid for. You can see here, I don't know what year this is, '02, right? The latest that we can go to. According to what we have here, not saying this is sound proof, but UJ made all-time highs, right? And it only took a little bit of understanding what economically was going on with the central banks. It was a no-brainer that UJ was going to go higher because Japanese yen have a negative rate, the Feds have a positive rate. If we look at another bank, right, Australian bank, positive rate, 4.1. Now let's compare that. Right, that was AJ, I think. Let's compare that as well. Let's go back to 2016, guys. 2016 had a huge decline, right? Going into COVID, boom, and the prices slowly Consolidating, breaking down, COVID hit, boom, got this pull all the way down here. Liquidate any of the buyers, right? Anybody that was buying, all these clean lows swept out. Clean low, clean low, clean low. Anybody that was buying, stop losses below these lows, they run it, right? Price comes back, we're in lockdowns, we get out of lockdowns, whatever the case may be. The timeline, if you're tracking the timeline of where we are in this pandemic, price now is rallying back up, right? Why is that? Because Australian dollar has been raising their rates. When's the last time they raised their rates? You see here, June 6th, recently. It was this month. They raised their rates up. So they went from 3.8, raised it back up, 3.85, raised it up to a 4.1. And we can see it's reflected in the price action. Look at this month. Look at the month of June alone, guys. Look at the month right now for June. It's a large candle as well. Like I said earlier in the video, small range candle. Look at that, small month, large month. Large. You want to catch pips? Most likely going to catch it when you got a small previous day, small previous week, and especially a small previous month. Look at that takeoff. The interest rates for Australian dollar is going higher, so the yield is going higher as well. We're flowing into Australian dollar. Would you rather own Japanese yen or Australian dollar? According to what I just told you, I'd rather own Australian dollar, 110%. What's the next one that we have? We have BOE. BOE stands for Bank of England, and RBA stands for Reserve Bank of Australia. You can do your due diligence. BOE stands for Bank of England. We have a positive rate of 4.5. Recently, they changed it last month on the 11th. So I think they have a rate decision coming up soon. We'll see if whether or not they increase it. Odds are they increase it again. And we can see here, 4.5, definitely interest rate differential between a negative rate, right? Big difference in the interest rates there. Let's go down to, didn't want to show you that. There we go. Look at this month itself. Go back to 2016. That's the start of 2016 there. And we can see how price eventually found its way going higher and outpacing the Japanese yen. Outpacing the Japanese yen. Now let's take a look at the Japanese yen futures contract. So let's see if we can find it here. Yen crosses, bonds, futures, yen. There we go. Look at that. Look at that. Let's go to 2016. 2016. And the reason I'm showing you this is because think about how you can set yourself up long term if you have an idea of what these countries are going to do with their interest rates. Interest rates are the number one driver to foreign currencies. That is a sound fact. Nobody else can tell me difference. Interest rates are a sound direct correlation to the price action to the foreign currency exchange. FX is definitely impacted by the rates by these central banks. The yields are impacted. The higher the yield in the country, the more likely the central banks are going to say, I'm going to invest in you. Give me your currency. I want to buy into you. The lower the yields, odds are less attraction, right? Competitive. Now, when you think about banks, now I don't want to, it's not like I have a PhD or master's degree, any of these things. I only have a BA in psychology. If you think about the way banks are set up, they're in competition in getting your money. These banks want to get your money, whether it's JP Morgan, whether it is Chase Bank, whether it is Swiss Bank, whether it is whatever bank it is around the world, right? You have multiple credit unions or multiple local banks around you. They're all in competition, right, to get your money. What would make Deontay sign up and put his money in a savings or checkings account with this bank? Why would I open up one with this bank? They need to have some type of incentive, right? It's the same thing with these foreign currencies. What's the incentive of me buying into your currency? Why should I own your currency? Well, because we have a positive interest rate. It will make you money. Hold my currency, and down the line, it'll pay you back. This right here, Japanese yen, this is not encouraging, right? That is not enticing at all. What is going on in Japan? Do your due diligence. I want you to research I want you to research after watching research what's going on to the citizens in Japan, what their GDP is looking like, and how well the citizens are getting by with inflation, with negative rates. I want you to look into that. 2016, they made the decision, negative rates. So we get a spike, quick spike. Of course we get a spike. And why do I say of course? Because before things go down, they must go up. So it goes up, it liquidates anybody that was once selling before the big move. That's what they do. Before the big move, they don't want you catching the same train as them. They're going to kick you off the boat. They're going to kick you off the train. They say negative rates 2016. Cool, let's do it. So they're going to pump it up right before the dump. And they dump it. Accumulate, building sentiment, consolidation, not doing nothing, not doing nothing, not doing nothing, not doing nothing. And finally they said, yeah, it's time. Let's pull the plug. Let's pull the rug underneath their feet. Drop it. Drop it on them. And look at where Japanese yen dropped. So according to TradingView, like I said, not sure if this is the most they've ever tracked here, but we see it starts here in 2000, right? TradingView started to track it in 2000, at least from according to this chart. All-time lows. Those negative rates are not doing so good. Short term, what? What happened? Short term, swing high. We're going lower, guys. Odds are it's going lower. I would be very surprised if it goes higher, but odds are it's going lower. Unless something along the lines, those that work in the central bank or the Bank of Japan, they've come to realization that they regret their decision of negative rates. But if you figure these things out ahead of time, ooh-wee, best believe you will get paid. You could slowly compound into selling Japanese yen. And you could slowly compound into buying any currency pair crossed or quoted in Japanese yen. So UJ, AJ, CADJ. Let's look at CADJ. I don't think I have looked at CADJ. Look at that. It's bullish. Bullish, guys. Bullish. Like I said, before things go up, they must go down. What do? They liquidate. What do they do here? They liquidated folks right here. Liquidate them. See you later. Go long. That's what they do every single time. What's an ideal buy scenario? Run a low, run clean lows, run the previous daily low, run the previous weekly low, run the previous monthly low, go long. Same thing vice versa if you're going to sell. Break the previous daily high, break the previous weekly high, break the previous monthly high, go short. Like I said, before things go down, they must go up. Before things go up, they must go down. There you go. CAD, right? So if you look at, let's see if we can find Canadian, right? Bank of Canada, right there. Positive rate. Right? Right? It's cool, right? It's pretty cool when you see these things. And people actually sit down and do the time to actually explain it to you. Now, I know I'm not sitting here and explaining it in very intricate details. I'm explaining it in very short and digestible terms. I don't want to sit here and try and break it down. I'm not some philosophy guy. I'm not some deep dude. No, I'm your average Joe. 24 years old. I make a little money trading Forex. That's it. There's nothing to it. Not no Albert Einstein, the Elon Musk, even though I don't think he's that intelligent. I'm not those guys. Your average dude that lives in New York, and I just get by on paying my bills doing this. That's it. And yes, I have the help of other people like we know, Michael Huddleston, ICT, Larry Williams. Not that I was mentored by Larry Owens personally, but through his book, through his videos, through his teachings and seminars on YouTube, ICT as well, free tutorials, mentorship, charter, stuff like that. Those things made me who I am. Those things made me Forensic Forex, the trials and tribulations. So I do give credit to those before me. I guarantee give credit to all those guys. And even those that were also charter, even those that were in paid mentor, those that were in a trading community, Discord, whatever chat I was in, many people made Forensic Forex, made me who I am today. Whether that they taught me a lesson, as in like, yeah, I shouldn't be trading like that, or yo, I need to be trading like this, or looking at it in this perspective. I take those things with me, comprise it all together, and you get Forensic Forex. Look how price comes down into this real quick. It's so funny when you see these things, man. Whoo! What a trade setup, man. What a trade setup. Nice, right? It's nice. Break the swing high. Right, price breaks this swing high here. Comes right back into the speed. That's that speed. Why am I calling this speed? Because there's a gap in price. There's inefficiency. Algorithm does what? Yeah, we're going to get that sometime in the near future. They come back to it. What are they most likely pushing for? These highs here. Doesn't take a rocket scientist to see that. But they're most likely trying to push into these highs. Most people say, oh, what about this? Is this a bear or shorter block? Could be in theory. But right now it's beyond the consequent encroachment or the equilibrium of this body, of this candle. Odds are it's probably not respecting it. It's going to keep going higher. It's too close to these highs. Like I said, Japanese yen, negative rates. Negative rates. Now, I want to talk about how you can compound in the trending environment. So we're going to bring it back to our IPTA charts. So let's say, for example, we're looking at Euro. So we'll go back to Euro. Go back to the daily chart. I'm going to clear this out. So far, going into June, we can see it's bullish. But if we look at all the down days, we notice something. When the trend is bullish, the down days are just new opportunities to go long. If you look at June here, we have 1, 2, 3, and currently Friday is 4. We had 4 down days, and after those down days, we most likely saw an up close. Isn't that interesting? Now, couldn't the same be said vice versa if price was going down and we got a up day? What happens after an up day? Let's take a look at DXY real quick. Going back to June. This is June right here. What happens after we get an up day? We get selling for some reason. Why? Why are we getting selling after a up day? Well, I'll tell you why. I'm not saying this is completely correct, as if I'm actually a central bank trader or I know how the network works. But odds are they're just pulling and luring the sheep to the wrong side, making you think that the market is going to turn around because it closes up. You think that's a new trend unfolding. It's not a new trend. Odds are it's just them repositioning themselves to say, yo, let's accumulate the orders and get into more shorts than longs. And then slowly as the days go by, we're going to unfold it, and then we're just going to see the price dramatically drop down. Up close, down day. Up close, down day. Up close, up close. Now, sometimes you'll have 2 up closes, or 3 or 4 sometimes. But then we really want to see in retrospect how is price going to react to it. And we can use hindsight to gauge that. We don't have to look at the current price action to see what could happen potentially here. Because you can see how this trend is going down. You have up closes and then down close days after these up closes. Let's just look at another month where price is showing signs of going down. What happens in all? Let's just take a look at this price leg going down for DXY. Just relatively, real quick. Look at what happens here. Up close, down, 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 down. Wow. More, what's this? 5 days? 5 days down. Two up closes. Down, down. Up close, down. Up close. Down, down. Look at here too. You get 4 up days. Happens sometimes. But what happens after those 4 up days? We quickly, not even small candles, large candles, getting at or medium to large candles. Are trying to get away from the up closes because that's where they're selling. That's why you're seeing it drop so dramatic. They're increasing their net longs, and finally it spills over, drops. And that's what 2023 March going into April going into March. Same thing happens. Doesn't matter where I'm looking at on the chart. Let's take a look at this leg here from 2022 November going into January 2023. Look at all your up days. Up days, up days, up days, down, 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 down. Update, 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 down, 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 down. Up, up, down, down. Up, up, down. And you can also see same patterns that Larry Williams was talking about is still occurring to present day price action or relative. I keep saying the word relative. I've been saying it all day. Easy words. We can see how the price action is still showing the same signs Larry Williams was talking about years ago, guys. Same thing. Small body candles. Look how tiny these daily candles are. Small, small. Look how large the next day is. See how I catch that? That's how you catch those large moves. People always ask you, how do you catch the large moves? How do you catch 200 pips, 300, 400, 500? Wait for the small days that are opposite to your trend. But then people go back, well, how do you catch the trend? I showed you that earlier today with the DXY and EU. The daily updates, it's showing you how I find my daily bias. I have a video that also explains daily bias. Look at how this market starts trending up. See that? Look how a new trend unfolds itself. Price comes down. What is that? It's a raid on stops. Quick. Raid on stops right there. Raid the stops. Price turns back around. What does this do? Take a swing high. This is the quickest way I like to explain it. Breaks a swing high. What does Deontay do? I'm on alert. I'm like, oh, crap. This is probably momentum shift. Plus, we have the sign of what? Speed. Fair value gap. Right here. All we have to do is wait for what? Higher swing low. What do we get? Swing low here. 1, 2, 3. Might have been stopped on it, unfortunately. But we still have it going in. So we have a stop here. What happens after that stop run here on that swing low? Price goes higher. Keeps going up. And in this low price action like here, March 2023, right? Or February 2023 going into March, look at all the down days in this small uptrend. Down, down. What happens after these down days? Up, 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 up. Right? Interesting. Let's take a look at S&P right now. We're going to leave you guys off with this right now. Take a look at the S&P 500. So we've noticed the S&P 500 and stocks have been going up. So Apple made all-time highs. So if you've been investing as well into like stocks, personally, not a financial advisor, disclaimer. Whoever manages your funds, right, or your savings, your checking account, your spouse, your partner, girlfriend, boyfriend, etc., right? Telling you, take your future very serious. We live in a world where money matters. I didn't make that rule, right? I didn't make that rule. Yes, you can always say, yo, I can live a simple lifestyle. I can move off the grid, or I can live in another country where, these norms that we make, gotta have a car, gotta have a house, gotta have this, da, da, da. You can live in other countries in the world where that stuff doesn't exist. And if that's what you want to do, you go do that. But those that actually play inside this game that we call life, right, around capitalism, all this stuff, you need money to survive. And if you're going to play this game, play it smart. Invest into your future, whether it's Forex, stocks, cryptocurrencies, real estate, precious metals, whatever it is. Make your money. Stop wasting time. I'm 24 years old. I'm not getting any younger. I'm acting like if I'm an old man. I'm not an old man. I'm a young dude. But I'm acting like I'm an old man because I know time is precious. I'm not going to be on this planet for 100 years. I know I'm not. Just not how it is. And even if I was, The odds are my health is going to be probably deteriorated. I'm walking around, think I'm going to be 100 years old still trying to trade Forex? No. I'm trying to get this stuff right now. Next 5, 10 years, I'm trying to rake it in. I'm not even going to lie to you guys. I'm trying to rake it in. I'm trying to bring it in. Trying to make wealth here. Invest in yourself. Invest, 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 invest. You work a 9 to 5 job, take that money, pay your bills, sacrifice. Don't go to the club. Don't hang out with nobody. Close the door, learn a skill, make more money. I'm sorry to say it this way, but that's just the way things are right now. S&P 500 has been bullish. Stocks been bullish. Apple, Tesla, Meta, Amazon, Alibaba. Not Alibaba. Don't quote me on that. Other stocks have been very bullish. But generally, you see the S&P going up. You're going to see those 500 companies that within the S&P go up as well. Apple makes up a large portion of the S&P. So we know the market is bullish. But if you look at this trend, look at all the down days. Let's say we're starting in June, just for the reference, because we're in June. Look at every down day, guys. Every down day. You start to realize these small little things. That doesn't take a rocket science. Down day, another down day. What happens after all? You can't use this one really, but what happens after these down days that we have currently? Up, up, up. Right? Isn't that so simple? You can invest. I'm not saying stocks in general, but you can invest into yourself. And these same ideas and concepts apply to all markets, guys. All. It's all rigged the same. This game that we play and making all this fake money, trading, it's all rigged. It's all rigged. And the sooner you understand that, the quicker you'll understand, it's simple. Stop overthinking it. Stop reading those retail textbooks, all those YouTube channels that are all clout chasing. They got all the fancy cars, the jewelry, the women, the good looking dude, whatever it is that they have you enticed on aesthetics. I don't have to show my face. I don't have to show my face in a little box, to show you, this is Deontay trading for. I don't have to show you my face. I don't. I have to show you the chart. That's what's important. I don't have to show you my savings and bank account. I don't have to show you my FTMO withdrawals. I don't have to show you that. I have to show you consistent models. I have to wake you up and bring you into a realm of, wow, all the other stuff out there is garbage. Nonsense. Nonsense. Tell all my close trading buddies, everything I've ever learned about retail trading was basura. Basura. Just straight trash. Garbage. It's the same thing over and over again. Yes, some people may see this. Oh, what about this? Deontay looks like a false break. Yes, that's what happens. If price breaks a swing low and doesn't give you a lower swing high, it's just a false break. Price is going to continue in its trend. That's all it's doing. Right here. Just to show you here. Probably looks like the equal low. So low on this. 49.35. 48. So this sweeps this low. It breaks this low here. That low is broken right there. But what happens after it? It continues going higher. That's just a sell stop raid. The new trend wasn't unfolding because it didn't make a lower swing high formation. It failed to make a lower swing high to then go lower. Because if it was going to go lower, it would do this, that's the swing high up here, right there. Come up, make a lower swing high here. New trend unfolds. Doesn't do that. Instead, it false breaks everybody. Tricks everybody that stocks are going to decline. That's why I don't listen to these news headlines and all these Forex pages. I don't listen to nobody because I know it myself. I don't need anybody. Yes, like I said, I'm thankful for those before me that figured out these things and taught me these things. But now I have my own wings. I don't have to stay in the nest anymore. I could go spread my wings and fly across the world now. Do whatever I want now. The sky is not the limit now. Once you see these things. Swing high broken. What happens after this? It's the same thing. What's that? It's a higher swing low, guys. What are they doing here? Repositioning themselves to go long. They're making money here. These down days, everybody thinks they're losing. The hedge funds are losing. The big prop firms are losing. The big banks are losing. The large banks are losing. The commercial specs are losing. No, they're not losing, guys. These people have money. Money you could never imagine. And what are they doing? They're loading it up. Loading it up, guys. Loading this down day, they're buying. They're happy. And even if it's not this day, the next day they're buying. I know sure, me, I'm buying. The next day I'm buying. Especially if the trend is bullish, I'm buying. And I'd be glad if I get another lower price. Wow, I get to buy at a lower price? Thank you. Because I know eventually it's going to come back higher than where I brought it from. It's going to get back to entry. Then it's going to get above my entry, profit. Look at that. Price goes higher. Same thing here. What's this? That's another swing high broken. What do you wait for? Higher swing low. I think we have one, two. Technically, this would have been it if we were counting days. 1, 2, 3. That third candle breaks this middle candle's high, so that confirms that higher swing low here. We can see how we got a quick run on it. Happens. At least this wasn't a deep retracement. You can see how it runs that low. But even though it runs that swing low here, do you see a new trend unfold? You don't. You don't. You just don't see a new trend unfold. You just have to be patient. I feel like people are not patient enough because the market is live and trading. They're just so anxious. They're like, yo, I gotta go trade. I gotta go trade. I gotta make money. Sometimes you gotta wait for the best setup. And sometimes you gotta wait for things to align for you to then get those long expansions. That's a large expansion here. Believe in this consolidation period, right? What, they've been holding price sideways for a while. And then finally, boom. Boom. You just miss it. You just miss it. And in all this time, you're thinking to yourself, why did I not see the signs? It's there. It's there. I'm telling you, it's there. If you keep following the swing points, or it breaks the swing high. Okay, wait for a higher swing low. Okay, can I find a long? Okay, set the long. Set my parameters. Set my stop loss here. Sometimes you catch big. Sometimes you lose. Sometimes you lose. But with the risk management, you're able to have the longevity into this career. The risk management is what allows the professional traders to outtrade the non-professional traders and those that can't go full-time trading or those that can't actually see consistency because the risk management is poor. The psychology is poor. Live life. It's not about the markets every single day. It's not about that. Hopefully this was insightful. Peace.